Hey, good morning. Bill Burnett here with your weekly update for Friday, December 6th. And boy, BLS came out this morning with a number of 266,000 jobs, new jobs created. 180 were expected. And so that's a big, huge miss to the upside. And 41,000 positive revisions for the previous 2 months. So that's awesome news for employment. And but boy, today was just a huge surprise to the upside. Hard to remember a time when ADP and the Bureau of Labor Statistics said such different things. Unemployment did tick down from 3.6 to 3.5. The two different reports, just so I can kind of get into the weeds a little bit, is there's a business survey for job creation done by ADP, and they're measuring payrolls, layoffs, hirings, etc. And they report a number out, and it's never exactly on the BLS number from Bureau of Labor Statistics, but they're reasonably close, and over time they kind of even out. And BLS, the Bureau of Labor Statistics number, it's a household survey. So they're actually calling homes and households and getting statistics that way. So a huge, huge swing when ADP says just yesterday, said 83,000 jobs were created, and BLS came out today and said 266,000 with 41,000 positive revisions upward for the previous 2 months. So not sure of the disconnect, but want to reach out to you, see how the bond market's reacting. Actually, not too bad. I thought it would be way worse than this. If we look here at 10 o'clock, which I'm talking to you now at 10:13, it's actually up 5 basis points higher than yesterday, yesterday's close. So it's only 9 basis points down on the day. So much, much better. I expected 20, 30 points to the downside today based on the news that came out and how extremely outside the box on the high side it was. A couple things to look at. Let's look at a trend line. So let's tie in the lows and the closings here as we move forward. Right there. Okay. And so when I tie the bottoms here, and these are all, this is the bottoms where this one closed. These closed all on the trend line. Here we are right now. We're actually above the trend line now, but we actually this morning we were down touching the trend line again. We've broken through the 25, 50, and 100-day moving averages, which were all right here, tied together almost on exactly the same number. And typically that would form a great floor of support and probably keep us there or push us up to the high side, which is great. Again, we're looking at the mortgage-backed security chart here, and as the securities rise in yield, rates go down. So, and a simpler way to look at it is green is good and red is bad. So the thing that's making me a little nervous here is we did break below the 25, 50, and 100-day moving average. We did hit the trend line. There's a lot of white space here since we've broken through the floor of support for the 25, 50, and 100-day moving average. Now that's a ceiling of resistance, and there's lots of white area here to continue to trend down. Right now, I think it might be a good time to have a locking bias. We could have a rebound back, which we have already some today. We were down, I think 17 basis points was the worst down here at the bottom. Now we're only down 9 basis points. So I think the market did a knee-jerk reaction. It still wasn't as bad as I thought it could have been when it was at its worst, but it's come back now. It's only 9 basis points down, and technically at 10 o'clock we're actually 5 basis points higher to the good than yesterday. But we are seeing, lots of volatility on a daily basis, and the last 3 days has not been favorable to us. Right now, I would say it's probably a good idea to consider locking an interest rate if you're actually floating your rate. If the damage has already been done, you might want to look at, and you're closing like in a week or some very short time period, you have to lock pretty much. If you're closing, 2 weeks or out, you might want to wait and see if the market does have a rebound, as you see, even though we had a big bad day down here in early September, boom, the market came back, and it came back strong and pretty quick. Then we had the tariff news. Part of that's the rise here was on the tariff news. We're going to have a tariff agreement, and then boom, oh, just kidding, we're not really going to have anything. We're postponing that. Well, you can see what happened to the market. We are tied to the Dow in the sense that when the good news comes out, like today, lots of jobs created, the stock market will take off and start to rally. Last I looked, we were up 282 basis points on the Dow, and that takes money out of the bond market as well. So not good news, and then money coming out of the market, riding the stock market up. Any questions, though, give me a ring. Bill Burnett, 703-598-4198, or drop me an email. bburnett, BBURNETT, at Mortgage Digest, MORTGAGEDIGEST.com. Hope you have a great weekend. Talk to you soon.